Ladies and gentlemen, welcome to another interview, kicking it session. I've got my man Drew Kernosky. I call him the crypto tax guy. Easy way to remember him. He's actually the founder of the Archer Tax Group LLC. He's just recently moved to Denver, or outside of Colorado, right? Denver, Colorado.
Yep. Yeah, we're a little bit north of Denver.
Yeah, so we're gonna get into it with him. He's actually been on my my channel once with the Block Party podcast with Truth Blitz and I, and then also had him on, I think, in January of this year on my channel, or April on my channel. And which one was it?
I think it was January 1st with you, and then April on the Block Party, but it was kind of a blur because, it was tax season, and we had a huge amount of people reach out, and we were very thankful for people stepping up and trying to do the right thing when it comes to their taxes.
Absolutely.
So we can help as many as we could.
Yeah, that's great, man. And Andrew, you guys see his information there on the screen there, Drew at archertaxgroup.com, if you ever need to reach out to him. I think, do you offer any free advice?
Yeah.
Okay, initially.
So basically, if you have questions and they're quick emails and you want to do it via email, feel free just to shoot it over there. If you go to our website and go to contact us, you can actually schedule out a 15-minute phone call. Usually we can answer just about any question within 15 minutes. If it needs to be something more and a little bit more in depth, we can kind of talk about it there. But like I said, at the beginning of the year, we're all about information. We want to make sure that people know what they're getting themselves into. We get a lot of people asking really good questions right now because they feel like they were either sitting on the sidelines as the run-up happened last year and they saw a lot of people get burned, or, at the very least, wanting to make sure that they're doing things the right way this year. Obviously, it's a little bit harder to make money in a bear market, but there are people still making money and still making trades and still moving in an effective way.
Right. And so you've got a nice new website here.
Oh, yeah.
You've got the whole new branding and look going on since you moved out to Colorado.
That's all my wife Hannah's doing. She is, if anything looks good on the website, she is the artist and the brain behind that. I am literally here to do taxes and talk technical.
So, man, earlier, again, the world has changed night and day from when we first talked. I initially had you on just because I reached out to you. This is no paid type of thing going on here, guys. I reached out to Andrew because I was trying to get someone on the site, on the channel, to just give us some information about how do we handle our tax gains. We made a lot of them back in 2017, so I just wanted to inform you guys about that. So Drew, what's the state of crypto? What are you thinking? Like, what, you don't have to tell us what you have in your portfolio, but how are you thinking crypto will look in 2019?
So I think the closest thing I can ever make comparisons to is it feels a little bit like 2008, and back then I was working in commercial real estate in Western Michigan.
Okay.
And the phrase that got thrown around a lot was cautiously optimistic.
I
think that applies very well to crypto here. I think things are going to come back. I think we've got some clear winners and losers. Being out here in the Colorado area and being able to see projects working in real time and seeing the development in them, going to different conferences, talking to different projects. I'll make a shameless plug. Skycoin, I love the concept of what they're doing. Projects that they are doing social good, but there's a component that you can make money while providing a service. To me, that's
can mine Skycoin, right? Is that how that?
And then if anyone from Skycoin wants to correct this, feel free to. You basically have a mining rig that they send you the specs for. It looks like it's a bunch of Raspberry Pis, and the idea is that it's kind of a VPN that will broadcast out internet connection. So you hardline it to your internet and you broadcast out Wi-Fi for other people to access, and then you get their tokens or their gas essentially for providing that service. So in areas where there's not great connectivity, you can daisy chain them and create wireless networks and be your own ISP. There's an incentive for people to bring services to underserved areas.
EOS Detroit is trying to do that here in my city. They're a block producer on the EOS network blockchain, and that's going to be the future, man. I hope so. We can kind of bring internet to people that can't afford it,
right?
Or in areas like you just mentioned that is really inaccessible. That's cool.
Yeah.
So you like Skycoin, but what about us being kind of ahead of ourselves? Was it like a Alan Greenspan irrational exuberance in 2017, or?
You know, I think in a way, yeah. I had what I called the little old lady index, that the more little old ladies were asking me about Bitcoin,
Yeah,
just, you
buddy.
know, as an investment. Like to me, that's when I knew we were kind of at peak.
Yeah.
I was hoping that things were kind of going to bounce back a little bit more. I think right now the biggest driver in a lot of ways is going to be as the regulatory certainty kind of comes in, you know, whether it's good, bad, or in between, that's going to open the door for some institutional money. But I think we have to be very cautious when we look at projects and say, do the tokens actually have any value within the ecosystem, or are we just treating these as shares of stock that actually aren't shares of stock? So I think depending on the project, you know, the tokens have absolute value. There's some that I would say, you know, you're just kind of holding them to hold them, and it makes you feel good, and enough people feel good about it that they have value. So
how long have you been in crypto again? I can't remember.
I've been watching the market since about 2016, and started getting invested early in 17.
Okay.
And then obviously have been really hands deep, or, you know, wrist deep in it since probably, oh gosh, January is when we started investing quite a bit in 2017.
Okay.
And so we've seen some ups and downs. We rebalanced our portfolios. We did a lot of loss harvesting this year, which is, you know, one thing that I think a lot of people aren't sure of what.
So we're going to talk about that. But one thing you just mentioned, rebalancing your portfolio, that's, I think, so important, and many people miss that part. Is that if I have a basket of, let's say, 5 cryptocurrencies, right?
Yep.
And one of those cryptocurrencies just shoots and blows to the moon. Right. Now that one represents 80% of my portfolio. You should rebalance, right, and spread that to the other coins or tokens that you have.
Certainly.
Yeah.
Well, and some of that's divesting, and some of it's just making sure that you know what you need to do. You know, and this kind of goes back to what we talked about before, on the block party of making sure that you know what your timing is too. We waited till we hit the 1-year mark for some of our tokens in order to really make sure that we were getting the best tax treatment. And in some cases, you know, we may have lost out on some loss, but depending on what you're doing with that token. So if you're going from that token straight to fiat, you don't necessarily have to worry. But if you're going from, you know, say an altcoin to one of the main 3, then there's all sorts of things that we have to make sure that we're doing as far as tracking the basis, making sure that as we're divesting those profits, we're setting something aside to cover those profits, because a lot of people got burned on 2017 taxes because they were trading and day trading and swapping from alts to regular coins instead of just parking some of their funds. And, you know, you can't ever complain about making money, but you got to know when to exit as well. Those same people now are, you know, facing down large tax bills that their portfolio is now worth, you know, what, a 20th of what it was, you know, back in the day. And so they're having to get a little bit creative as to how to deal with the IRS. And there's a number of ways that we can do that.
So how do people, okay, so the thing is, I bet a lot of people wish they would have sold in 2018.
Oh yeah.
Or 2017.
Right.
Into going into 18.
Well, and we had actually set up our payment system that we were taking payments at the end of 17, because we're doing a lot of consulting on the Tax Cuts and Jobs Act, because there were some things that you have to do before the year ended, and people were still a little bit uncertain. We knew where the laws were going to go. That we got paid in Ethereum at the beginning of December, so we let that cook for 2 weeks, let the exuberance ride up, cash some of that out, wait until after Christmas, cash a little bit more out. Okay, things are going well, and then we waited until January 1st to cash the remainder out, so we could push the capital gains into next year. So even within that, I mean, you can play the short-term runs, but you need to make sure that you're playing them well. You need to know what your basis is in those tokens before you make any kind of decision there.
So in a scenario with the person from last year, 2017,
yeah.
would it have been more advantageous for them to hold through this, or sell, or have sold at the end of 17?
Like all tax questions, I think it always is. It depends.
It depends. Right.
I've had clients that said, look, I've made enough to put my kids through college. I'm going to cash out. I'm going to pay my taxes. I'm going to call it a day.
Right.
I had guys that were trading all the way up through the end, swapping altcoins, that they would have just been better just to park it in Ethereum or even Bitcoin or even Litecoin, honestly. If they are thinking that they're going to hold for the next 5 to 10 years, that transaction back and forth creates a taxable event that they're now on the hook for, that is now essentially gone in value.
Yeah, that makes sense. So how I was talking to a gentleman that I see frequently at the cigar lounge here, well-known lawyer, like one of the top guys in the state, and he's like, he always asks me every time he sees me, he's like, how are those cryptos doing? I'm like, they're kind of pulled back this year, and people have to remember. Listen, Bitcoin was up 1,400% in 2017.
Oh yeah.
So it's like an 80% correction is warranted, right? It's crazy. But anyway, so he's saying like, I've been hearing a lot of people getting, indicted or whatever the proper term is for tax fraud, and it was something else, tax evasion or something like that. So, he was telling me it's starting to happen. They're starting to come after people.
Yep.
So,
well, and that's just the thing, though. Is you're talking about an asset class where the selling point is it's an immutable ledger. So it's out there. You can't really obscure Bitcoin to any relatively certain degree. There are some different ways to go about that, but that's for someone else to talk about, not me. Always pay your taxes, kids.
Yeah.
What I would say is, the IRS put out a notice in July. It was July 2nd, and they stated, look, these are the 5 focus areas that we're going to look into. And number 3 was virtual currencies, which is their term for crypto. They're developing an enforcement division, and it's really low-hanging fruit. You get a lot of genius guys out there that, have these different YouTube channels that are ANCAP, and I just say I appreciate the sentiment. I would love to see more freedom, but you don't get to go on a YouTube site and say, well, I'm not paying my taxes and you shouldn't either, because there's confession. And then they have, in their comments, donate below if you like our show.
Right.
The IRS a taped video confession and the entry level information to your wallets. So I'll be curious to see how many of those guys get taken down. I think there's a lot of people that were being bad actors in the space, and the IRS is absolutely going to go after them. But there's still, I guess, leniency. If you're the one that's bringing the information to them and setting the pace and saying, well, these are the numbers that I have, now the burden of proof is on the IRS to prove those numbers wrong. So in a lot of cases, some of our clients have been literally just, hey, I have been in this since 2013. I don't have any of my records. I need help. So we try to pull together as much as possible, and we build a cohesive narrative, and we make sure that we get them on the right side of things, so that when they do have another massive bull run, they can cash out without fear. And so that's one of those situations where doing it right way and preparing is a lot easier than waiting for the IRS to come to you, because enforcement is coming, unfortunately. And I'll be curious to see how big or how quickly that gets rolled out. And I'm really curious to see the tax court cases, especially for that Litecoin exchange, which I'm still firmly against for cryptocurrency.
Yeah, so you were one of the, I had you and another tax guy on, and I think, was it you? What is your take on the Litecoin?
So for me, when you start looking at what Litecoin explicitly excludes, it's things like stock and trade, debt securities and other financial instruments. And then you look at the treatment for, precious metals being traded for other precious metals. There's a lot of established rulings and court cases on that, to the point where you can't trade gold for silver. So to me, I don't see how you could reasonably make a compelling argument, Bitcoin for Ethereum, Ethereum for Litecoin, Litecoin for ZRX. It just doesn't make sense. And to me, like I said, that until we have a tax court case to definitively close the issue, we're playing a little bit of defense on this. Plus, the other thing is most people don't file the appropriate paperwork. You have to file an 8824 for every single return or transaction that you're declaring as Litecoin. It's not the Michael Scott office. You just walk around and scream, I declare Litecoin exchange. There's a paperwork requirement, and I guarantee you those that have 4,000 trades aren't filing 4,000 of these 8824s, because I would probably end up charging, per form at that point, and you're not going to save anything because you're going to be paying your accountant way too much.
Interesting. So before we get any further, man, I know you do have an offer for my audience. I don't even know how the hell we're going to do this. I guess I could just pick like 2 random people in the comments. So guys, make sure you comment, like, and comment in this video. Drew will be in the comments answering any questions as well for you guys. So we have here, you've given us tickets to, it's called the blockchain or what is it called here?
Blockchain World Conference. It's going to be in Hollywood, Florida in December. So for those of your viewers that are in Michigan, this is a great chance to come, dry out for 3 days.
Yeah.
So it'll be a very interesting conference. It seems like it's a pretty good speaker lineup.
Yeah, no, I saw McAfee.
Yeah.
Neil Patel. I think Brock Pierce will be there.
Yep.
Some heavy hitters. Yeah.
Yeah. So we've got 2 extra tickets, and we want to give back
Dr.
to the community
Patrick
as much as we can.
Byron to be there too. Oversight. I heard him speak over at the International Blockchain Conference in Miami. He had a really good talk there. So yeah, we've got 2 tickets, guys. Just make sure you comment in the section below, and I'll just do a random number generator, and pick someone, I guess.
Perfect.
I don't know how I'm gonna do that, but we'll figure it out. Just make sure you guys comment, and we'll get you those tickets. So we appreciate that. Now, what you actually came on to talk about today regarding taxes, you wrote a piece on your website, and I'm just gonna go to it really quickly.
Yeah.
And it's about crypto-backed loans. So tell us about how this can help mitigate some of your taxes, your tax liabilities.
So asset-backed loans are, probably one of the oldest financial instruments that have been around. Crypto is no stranger to that. There's a lot of different firms out there that are doing different terms for their loans, but the general idea is if you are borrowing against your cryptocurrency, you're not actually selling your cryptocurrency. So for someone that's been, sitting on Bitcoin since the dawn of Bitcoin, they've got a ton of capital gains baked in there. What you can do is you can borrow against those Bitcoin, and it basically gets held in trust somewhere, and you get, either fiat cash, or in some cases they'll let you borrow, different coins and things like that. And you don't recognize a taxable gain unless you default on that loan. Now, the real benefit there is if you've got a business of some sort, you're able to actually write that interest off as a business expense. So for those of you that are actually day traders, or miners that have a stack that you want to stay long in a position but want to have capital to expand right now, this is a great way to go about that, because you won't owe any capital gains tax on anything that you borrow against, like I said, unless you default.
Okay, so wait a minute. You're telling me I can borrow against my Bitcoin, take that, and then go trade it?
Yeah.
And then those funds that I'm trading are not considered Litecoin and going back and forth and all that? That wouldn't be? Wow.
So with that, there's even a platform specifically for the ERC20 based tokens called Dharma.io. I think it's the Dharma Protocol. And the idea being is you can actually borrow token for token. So you can actually be the lender, you can be the borrower, you can play both sides of that. And we've done both. There's holdings that we have that we're sitting here saying, well, shoot, I know I'm going to stay long on my Ethereum. I'll lend my Ethereum out right now and make a 7% return on my Ethereum in a month. And I've already got something that I know is collateralized. So even if it defaults, I just make sure I've got the right rates, and then I'm still making money no matter what. So there are still ways to make money in this market.
So guys, I have this Dharma on the screen now. This is what Drew was just talking about. I've never even heard of this company. So check it out if you guys are interested in taking some loans against your cryptos. I mean, I've never looked into this really, but I've heard of like Salt Lending. I don't know how well they're doing. So
they're out here in Denver. So they've been doing a lot of meet and greets and events, and they actually sponsored the Blockchain Hub during Denver Startup Week. So they're still pretty active.
Okay.
There's 3 or 4 different firms. There's Salt out there. You've got Unchained Capital. And then BlockFi is another really good one. I've talked to both Unchained Capital and BlockFi personally with their leadership, just to kind of get a feel for what their processes are, what are they doing to secure your tokens, and they both seem to have a good idea of what borrowers need in the market, and they're trying to fill that need because it benefits everyone.
This Dharma is backed by Polychain Capital. That's a pretty big VC.
Yeah.
Yeah. Okay.
So they're trying to build this platform to really be part of the new financial instruments, to be a little bit more inclusive. To me, it's the democratization of finance. How do we get everyone the ability to be what the bank has been for hundreds of years?
Mm-hmm. Yeah, that's interesting. That's interesting. So yeah, that's great. I didn't even know about that technique as far as borrowing against to do trades and such like that. That's cool. What else in the crypto tax world is going on? What should the viewers kind of know about going forward? Because of course we know this year we've taken huge losses. How do the losses look this year, and how do we play those to our advantage?
Yeah, certainly. So for those that filed their taxes the right way, didn't do Litecoin exchange, and then they have a lot of basis in these tokens. So, you did your swaps, and now your Ethereum has a basis of, let's just say $1,000 to keep it easy on me. The price is what, 220 today?
Yeah, 220 somewhere around there.
Every unit of Ethereum or Ether you have is now going to be a loss item of, $780 if you were to sell it, trade it out, or, otherwise recognize the loss. So what happens is anytime that you have loss in excess of $3,000 of capital gains, so you had maybe got lucky with some of these alts here, you played the Ripple news pretty well and made some money, but overall your portfolio is down 50,000. Your total gains for the year are 10. You technically still have a $40,000 loss. So what you're able to do is you're able to take 3,000 of that remaining 40 and take that against other ordinary income. So your things like wages, other investments that are non-capital, so interest, dividends, things like that, will get subtracted out by that 3,000, and then the remaining 37,000 gets carried over to the next year, and it keeps rolling over and accumulating. So hopefully, inevitably, we have a bull run, and then you'll have that loss to offset those gains there. But the thing is, if you have you can't take 100% of the loss, but it does carry over, unless you're in the state. I think Pennsylvania is the only state that doesn't allow for state level rollovers. I actually had a client that they live in Pennsylvania. They had $100,000 worth of capital losses from other investments prior, that because the state law prohibits capital gains or capital loss rollover, ended up paying full tax on the state level, but on the federal level only owed on $2,000 worth of capital gains. So it's one of those things that sometimes your state really makes a big difference as far as your investment planning goes, but it's really hard sometimes to convince someone to move away from a state that they've called home for so many years if we're only talking
over a tax,
$2,000.
Yeah. I don't think that's going to happen for most. But wait, so let me hear, if I hear this correctly, I'm seeing a huge sell-off at the end of this year then.
So I think it depends.
Because people will realize these losses, so that they can then use that as a credit in the coming years, right? Wouldn't that be the case? My advice to a lot of my clients in that has been, you've got especially altcoins that you think the project's going nowhere. This is a good time to basically trade those into coins that you like. Because you trade without like-kind, you're essentially able to recognize that loss, and it resets your basis to whatever the recognized loss is essentially. And then from there, if the market comes back up, then you'll be able to sell, and you'll have the capital gain plus the capital loss to offset. I think the sell-off is really, really going to be determined by what is going on with institutional money in the market. I think if there were some clear big dollars coming in, that would spike interest quite a bit, and we'd probably see another feeding frenzy like we have in the past. Because I think that'd be a little bit of a prophecy fulfilled for a lot of the casual investors. Right. So speaking of institutional funds, what do you think about that? Do you think we've got another ETF decision to either delay it again, I think in December, or November, I can't remember.
There's been so many of them that it feels like there's a new one every week of, hey, we're proposing.
I think I'm referring to the Van Eck one. That's the major one that everyone is, they're really looking for a decision on. Do you think we're going to get a clear decision this year? Or I think the latest they can make a decision is February of 2019.
Yeah.
I think they're going to push it out.
I could see them kicking the can down the road.
Yeah, me too.
I think there was a new head of the SEC that's a little bit more pro crypto, so that might help push that along. I think the biggest criticism that I've seen that holds merit for not allowing the ETFs are there's too much manipulation in the market. I think the honest answer to that is, well, if that's your concern, then
it won't be for years, right?
Right. Well, you won't have it there, but the idea being, if you bring in institutional money, all of a sudden these whales, if you will, that flood the market or manipulate the market are going to start getting outpriced by a larger market. The idea should be not to shrink the market, but to expand it.
Yeah, that's true. That is very true. I never thought of it like that. So that's very true. If we have larger capital come in, these guys come in, then you're definitely going to outweigh the power of the whales that have been here since pretty much like the beginning.
For sure.
That's very true. I never thought about that. So yeah, it could go either way then, because I always thought about, hey, if they feel like that is the main criteria for them saying no ETF, then I can't see that changing for a couple of years.
Yeah.
But yeah.
Well, I think as people get more used to cryptocurrency and it becomes more mainstream, I think it'll be less and less of a scary thing. We out here in Colorado, it was at the tail end of this, or April or May, I believe. They were trying to push through, pro blockchain legislation. They brought it to the state senators and congressional reps in month 2 of the 3-month session. We have a part year session here, and they missed the votes by 1 because people didn't know. The senators, we had it by 1 vote. They went to a break, and then the senator changed their mind and voted nay instead of yay, and we lost out on the blue sky laws in this iteration. I think as there's more legal regulation and understanding of what crypto and blockchain really is, I think it'll fundamentally change how traditional power structures are going to view it. I think a lot of people saw it as, well, this is just a flash in the pan scam kind of thing, and I think there were some projects that absolutely fit that description. But I think more than not, blockchain offers a very interesting, different way to handle technology. I don't think everything needs a blockchain. I think 2017 showed us a little bit of, well, hey, let's put sandwiches on the blockchain. Hey, let's put blockchain on the blockchain. We need to get away from that. Blockchain.
I think we have. I think we have.
I'm hoping so.
I think the point has been. Yeah, I think we're done with that, man. So I'm glad about that. One last thing before I let you go, Drew. The new wave away from ICOs are these things called STOs. Do you know much about those? How do you see that playing into the system in the coming years?
So I think it's interesting to see how the ICO market has changed kind of entirely. Being on the tax back end, we've actually gotten pulled into quite a few projects where they are looking at going after accredited investors and trying to do things through a securities offering of sorts, but then converting those securities to utilities. I've seen all sorts of SAFs and SAFEs.
Yep, I've heard of those. Yep.
Whatever combination of those letters you want to come up with, as far as attorneys saying, well, we're not actually a security. And then you've got the guys that are still raising abroad as well, where now you've got, a foreign entity that holds all the tokens, and then you've got a US-based operations company. There's so many different things and movements within that. I would love to see people still being able to invest in these projects. I don't think that it's necessarily a bad idea to put some barriers to entry, because it makes it a lot harder to fundraise, $100 million off of a 1-page paper that you plagiarized from somewhere else with shoddy code. I think it forces companies to be serious, to bring on investors and put money, up front. I just don't want the average investor to lose out. And I think the more that I'm afraid of. Yeah. I think if we could change the accredited investor rules to be not that you have, $1 million in the bank and you make $200,000 a year, but more to, live in the information era. If you can pass a 25-question quiz that proves that you know how to do some amount of due diligence, you understand banking rules and regs, and you understand the difference between, a security versus, other.
Right, or have some type of, that's a good point, or have some type of test, like certificate to say I'm an accredited investor. Like I have to do with my Series 3, or whatever, as a CPA or EA you are, if that would be great. That way Let people self-certify and waive the rules and regs, because a lot of U.S. investors are getting passed up for international projects that have a lot of merit, because they don't want to deal with the SEC. It's got a pretty wide-reaching, influence, along with being able to work with, other organizations, Interpol and things like that, where people just won't let the Americans come play. And I think that's going to cause us to fall behind on the global financial scene. And also, someone who can buy a tenth of whatever their token of choice is still going to get the same 10% return that somebody else does. Let's not let people be limited by the old rules when we live in a completely different era, and this is a completely different ballgame. Yeah, very true, very true. And, I think STOs are in a step in the right direction, because now I think with the ICOs, really the person donating their ETH or whatever cryptocurrency to this project and receiving this token back. They really got screwed because an ICO token doesn't give you any ownership. You don't have any rights to vote. Right. There's nothing, you know. So really, at the end of the day, looking back on it, you know, most of those ICO participants got screwed. They got these worthless tokens, or even if they are worth something, what do you? There's nothing to do with. You know, no one's utilizing these tokens, and so you've given them ETH. And they've given you a token in return that's got some value, but they also have the token as well. So it's like they win twice, right? And then you're kind of in the dark there. So I think STOs may be a step in the right direction. Where when I say STOs, guys, I mean I don't know what the acronym stands for, but essentially it's like you have equity in the company, right? That's what the token represents. So. Yeah, we'll see what happens. I hope what you just kind of brought up happens, where there's some type of accredited certificate, maybe blockchain accredited investor certificate that you can pass and allows you to go ahead and invest. That'll be great, man. We'll see what happens. Got
to start lobbying, and if there's anything that I would want to tell to the viewers, it's get involved. There's probably a state level organization for crypto. Colorado's always been one of those states where we just kind of come up with an idea and come together and just push and push and push and push. And luckily our local government's pretty responsive and accommodating to that. Start going to meetups, start getting people together, start getting voters together, and start talking to your local reps and saying, look, this is something that's serious and needs to be addressed. We don't want our state to fall behind, because the states are going to absolutely start jockeying for supremacy as to who's going to be the ICO hub or the crypto hub of the United States. And right now, maybe I'm a little bit biased, but Denver seems like a really good spot for that because there's a lot of development. There's a lot of support from the local government as well.
Cool, man. Well, again, Drew Kernosky, Archer Tax Group, LLC. Man, I appreciate you coming on, sharing that knowledge, helping us make the right decisions here in the crypto space, man. I definitely want to have you back on at the end of the year because you kind of you got the wheels turning, man. I'm thinking that we may have a sell-off at the end of the year if no real institutional catalyst comes through. I see a sell-off to lock in those losses.
Yeah, I'm just hoping that we don't have another slide near tax season, because that just makes it a little bit difficult for clients and stuff like that. And I hate to be the guy going, well, it's all the tax laws, and I know it's not, but it's kind of hard not to argue that when you have people finally realizing bills due and having to kind of scramble to take care of those. But let's talk again at the end of the year, and we can talk some strategies for let's say you made some money and now it's not worth nearly as much. What do we need to do in prep for that? And how do we harvest those losses effectively?
All right, Drew Kernosky, the crypto tax guy. That's my name. That's I'm coining that one for you. All right, brother. Thanks again for joining, and we'll talk to you soon.
Awesome. Sounds good.
Holla.